On the screen you can see a chart, which is a traditional open, high, low, close bar chart. I don't like them. They don't tell you much. You have to really search to see what's going on. Now I'm going to overlay the identical chart, but with candlesticks. So, voila! Now this makes a lot more sense to me. As you can see, the red bars or candles, these are called candles now, and I'll tell you why in a minute. The red candles are the down days, and the white candles are the up days. So at a glance you can tell if the market went up or down. Now these tell you more than just they went up or they went down. The candles have been used by rice traders for centuries, since the 1700s. And what they tell you is they tell you about supply and demand for that trading session. For instance, let's go to, say, let's try this here last one, okay? See, it's a red candle. So what the red candle says is that it closed lower than it opened, okay? So you can see here, it opened right there. It went up, and then it went down, and then it closed lower than it opened. And these long tails here, they're called the wicks, or the shadows, or the tails. I learned calling them wicks, okay, because they're candles. So that told you something that happened during that session. Let's take the day before. It opened here, went up to here, a very short wick on top, dropped way down here, and then closed up a little bit. But the close was drastically lower than the open. So that told you that at first, when it opened, the buyers came in, and then the sellers came out of the woodwork, and they drove it right down, and then the buyers came back in a little bit, but definitely the sellers won the day. The next day, it opens almost where it closed the previous day. The buyers came in, and at some point, sellers came out of the woodwork again and drove it right down to here, and then the buyers came in and it closed right there at 52, at 527. So the candlesticks tell you about supply and demand, how the buyers and the sellers acted during the session. And it's not so clear when you're looking at the OHLC, open, high, low, close bar charts. That's why I like candlesticks. So now I think that's all I'm going to tell you. I'm going to tell you one more thing. I'm going to tell you about graphs, because it's a pretty basic thing. If you look at graphs, on the y-axis, like in math, you'll see there's the value of whatever it is that's being graphed. And it can be either a straight line like this one, all the spaces are even, or it can be logarithmic, where they are variable and they're larger at the bottom, and they gradually get smaller as you go up. That's the nature of logarithms. Ever look at a slide rule? I suppose that's dating me, but that's the way slide rules work. Anyway, if we look at the x-axis, as in math, that is time. And time is usually just straight line. All the spaces represent the same increment of time. So you're looking at this as it went through time, the value as it went through time. That's what you're looking at when you're looking at one of these bar charts. This is a candlestick chart. So anyway, that's all I'm going to teach you for today. So check in again. This is for the people who don't quite get what the Huey is. The Huey is an index of miners, which they're not just ordinary miners. They're the biggest miners in gold and silver in the world. And 45% of the index is Goldcorp, Barrick Gold, Newmont Mining, Coeur d'Alene. Anyway, the remaining 13 companies or whatever it is have about 5% each. And these are the unhedged gold miners. Now there's another index called the XAU. These are miners that hedged. their production. Hedging means they forward sell their production. So they sell the production that they're going to have next year. They sell it now. So this is what I mean when I talk about the HUI. It's this index of unhedged miners. And these are not just ordinary miners. These are the big guys. So I hope that clears that up when I talk about the HUI. Alright, here we go for Friday, August 5th, 2011. This is again the Gold Bug Index, the HUI. And as you can see on the top graph of the GLD, gold actually didn't react down. It took a little blip and then it returned to where it was. But the SLV, which represents silver, is what they pounded the hell out of. See, they pounded hell out of silver right here. So, when we left this last time, we were right here. And this was when I last recorded, and I said that I thought that we would return down here to this convergence of averages. And we did. We returned to it. And then, on Monday, Tuesday, Wednesday, we come out of the hole from the averages. And I was going to make a recording Wednesday evening because I just got this nagging feeling that 3 days of up and we're likely going to stop. At least go back and have a look at the averages. And sure enough, Thursday, they pounded her down. And on Friday, they beat it down and it went up and basically closed where it opened. That's a spinning top for you candlestick fans. And anyway, I wanted to put on here a Fibonacci study because I thought that, and there it is. The full extent of the move is from here to here, but look at the retracement. The original move back to the average was only a point between a 0.381 and a 0.5, which isn't enough for a good entry point because likely it's going to retrace more. And there it is. Wednesday, Monday, Tuesday, Wednesday, it went up and then it turned down. But look at it, overshot the 0.618. But where did it close? At 0.618. That is an excellent entry point. And since it's below the 200-day average, that is a good buy. So let's go look at something else here now. This is like my favorite indicator for telling me what's going to happen here. And that is my short-term rate of change. If I put that short-term rate of change where it just goes negative, look at how it picks off the time when it tanks. Picks off the relative strength, sell signal, picks off the Williams, picks off the MACD. The rate of change here is tanking. This is all longer term stuff, so, and picked off the stochastic. I love that when that rate of change passes through zero, it really does pick off the day. Anyway, I'm going to close it out at that. I think that the coming week is going to be, I wouldn't go jumping into anything, but it's definitely going to be interesting. I think maybe we'll base here for a little bit. But there are a lot of people that are negative. They think it's going to tank, and that probably is a good reason that it might take off from here. We'll chatter around here maybe before we take off. But definitely, this is a good buy right here. A good entry point. Yeah, you're also at the bottom of the Bollinger Band. Look at that. You're right there. You went way outside the Bollinger Band. This has got to snap back in there. It's got to head back up to the mean anyway, right here at 560. That's the most likely place. They always return to the mean. So, I'm going to leave it at that. That's for August the 5th, and I'll catch you on the flip-flop.